Well, my watch shows just about noon Central, 1 Eastern. So why don't we get started?
Yeah.
So
Jump.
welcome, everyone. This is the first webinar that will be hosted by Lazarus AI. We expect we'll have many of these future sessions, and we're looking for ideas from anyone on the type of content and panelists that will really be impactful and useful. Now, I do apologize, first of all, up front, because this was rescheduled a couple of times. Administratively, one of us, okay, me, had some travel issues, but it's actually a good time because we're right about mid-year. So today's topic is going to be AI and insurance, a mid-year assessment. We're going to have a variety of different topics and questions. We're not going to shy away from anything. We're going to talk about hype, reality, risk, regulatory compliance issues. But this is not a graduate lecture or seminar. Please suggest questions or comments. I know many people have told me they want to watch the recording of it, so follow up after that if you have questions or comments. And if we run out of time or we need to follow up later, we will address everyone's question at some point. Highly suggest that you all ask questions because we have some questions for you, and so it's often better to give than receive. One of the things that's interesting for me, and as I just said, this is going to be the first of many that Lazarus AI does in terms of webinars, is that we're starting with an all-star cast. Typically, I think organizations start off a little bit slow and build some momentum. Here, we're just jumping in with some great thought leaders. So without further ado, I'd like to let Alex G introduce himself. Then maybe Alex T can, then I'll do an introduction and then we'll jump into it. So Alex G, could you please introduce yourself?
Thank you so much, John, for letting me introduce myself and being here on this inaugural first webinar. So I'm Alex Goryachev. I've spent about 20 years, 25 years in emerging technologies, starting in the first use case of the internet, which is the digital entertainment industry. Moving on to the second use case of the internet, which was online e-commerce and shopping, right? The two pillars of the internet, which is really shopping and entertainment, and then moving to the real deal, which is enabling people to communicate. At Cisco, I've led global innovation centers for a number of years. And as part of one of my innovation projects, or Cisco's innovation projects, I've discovered AI. And my world has changed ever since. And for the last several years, I've been focused on AI. Gen AI specifically, looking at this not only from a technology, but from a people enablement perspective. How do we create AI-centric organizations and make them successful? Thanks again for having me here.
And you're also the author of a book. Is that correct, Alex?
Indeed, that is correct. Thank you.
Yes. And so I'm holding this up. He's not paying me to do this, but it's called Fearless Innovation, a no-nonsense guide. I actually read it in some of my travels. There was one quote that really stood out to me, talking about different industries. That says, "It's amazing that executives of these companies seem to be caught off guard every single time a new source emerges, even when the writing's on the wall." Now, there's some good news, bad news. The good news is he wasn't speaking about the insurance industry. He was actually speaking about a different industry. The bad news maybe is my association went exactly there to the insurance industry. And the reason I wanted to pull that quote out is I think a lot of people who are engaging and will be watching this session are trying to figure out, how do we avoid missing opportunity and how do we take advantage? So highly recommend his book, and that was something I found insightful. Alex T, would you like to introduce yourself?
Yeah, tough act to follow there. But yeah, my name is Alex Tran. I'm currently a partner here at Plug and Play. I'm one of 9 partners at Plug and Play. Been with the firm for exactly 8 years now. Be my anniversary on July 25th. But yeah, I focus on a variety of verticals such as insurtech, fintech, health, and enterprise. A lot of my corporate partners I work with happen to be insurance carriers, reinsurers, TPAs, brokers, hospital systems, and big pharma companies. I've invested in several AI companies in the past 8 years and have done up to close to about 90 investments so far to date. So that's a little bit about myself.
Yeah, and I've known Alex probably for about 8 years, and certainly one of the most insightful people I've found in insurance. So a real pleasure to have you here today, insurance and technology and innovation, I should say. So real quickly about myself, I'm John Keddy. My entire career has been in insurance at a variety of carriers and tech companies. I've had roles like CIO, CTO, CISO, COO, and I've also served as a C-level advisor in those functions. Joined Lazarus AI about 8 months ago, and now I get the opportunity to spend all day, every day into AI and financial services, especially insurance. At Lazarus AI, we have a tagline that we take very seriously. We are here to solve the world's toughest problems. So I will be sharing some of my perspectives and some of the things I see day to day in my role here, but always available to talk more offline. So without further ado, let's get started. The first question I have for the panel is, what is the level of interest in AI in the insurance industry today? We're now at halftime in 2024. What are some major trends we're seeing? And then maybe Alex T, we could start with you, and then I'll throw in my perspective, and we'll close strong with Alex G. So Alex T?
Totally. Gen AI has been the biggest buzzword, and I would say 2023 and moving forward into this year. We're trying to find more and more, all of our partners are always looking for more use cases to apply it into their different parts of their workflow. But, in the last recent few months, we see news headlines where New York and Pennsylvania Department of Financial Services, adopted a new AI guidance to reduce underwriting biases in their states. For example, Munich Re, just a few months ago, launched their Gen AI Copilot on its platform known as Really Ticks Zero platform. Offering that type of service to their clients. I know that Lincoln Financial expanded their partnership in late May with our portfolio company Evolution IQ to utilize their services to monitor their claims data. They went from doing a POC with their long-term disability product and now have expanded it into their short-term disability products. Other headlines we've noticed too is Chubb. They worked with Cytora. They're expanding their AI partnership there to apply it to different products across different claims document processing, because they just, Cytora actually went through our first batch and they released their Gen AI capabilities there too. And last but not least, I think generative process automation has been a very nice buzzword lately in this past quarter. One of the most popular startups at our recent summit was Orbi AI. I recently put them in front of 4 different life insurance carriers at Stanford last week. They went up against other conversational AI platforms for calling centers that have raised, one of them raised 621 million, the other one raised 165 million. And Orbi, they just raised 30 million. But, when they did their demo to the 4 insurance carriers, at the end during wrap up, I asked which one was their favorite, and Orbi AI happened to be their favorite because they're a plugin that sits on top of the web browser that will automate your workflow documentation in real time as you're moving through the workflow. So let's say you're working on Salesforce on your web browser and you're implementing a lead into Salesforce. As you're implementing that lead, it's literally documenting what you're doing each step of the way, and then by the end of your workflow, it's already ready to code and implement and automate. So it's really interesting to see how far generative process automation can go within the workflow within the insurance value chain there.
Yeah, it is, as always for me, it's just a wealth of ideas and information, and we're going to even go deeper into things you've opened the door on, like regulation and the amount of investment and hype and all kinds of things. I'll share next. And my view on this question, I'll start with the most strategic, the highest level. And that is, if you look at the insurance industry vis-a-vis other industries, even those in financial services, the insurance industry returns over decades will be lower. And it's a very capital inefficient business. And one reason for that is it's operationally inefficient, which lowers returns. So earlier this year, I was out in New York City in the offices of one of the world's largest consultancies, and their prediction had been of all the industries, insurance would be especially interested in AI, even generative AI. And they felt as we were going into 2024, that was occurring. My work here at Lazarus, what I would share is I look across the entire industry from a strategic perspective. I would put carriers in four buckets. One is carriers that are actively implementing AI today. Two, carriers and insurers who are doing active proof of concepts and pilots. Number three is a very large group where companies are doing lots and lots of ideation. And that's where I spend a lot of my day helping people do ideation or refine ideation. And number four, to be candid, there are some companies and carriers that are committed to, we are not doing AI. We are going to stick our head in the sand. We're going to not invest in it. I call it the ostrich strategy. And it's also interesting to me that sometimes companies in this fourth bucket, and to be clear, companies in the fourth bucket are the smallest of all these categories I'm outlining. They may tell me, well, we're a low risk company, so that's why we're just banning these tools and technologies and we're not going to invest. My perspective is in the times of fundamental change, sticking your head in the sand is the single riskiest thing you can do. So I don't see it as a risk averse strategy. I see it as inadvertently a high risk strategy by not really engaging in and understanding the tools and the capabilities. One other trend I'll share is although, in my day-to-day work, and not just me, all of us at Lazarus AI will work with some of the largest companies on earth in terms of insurers. Size alone doesn't matter. There are also far more moderate carriers and tech companies that we have a lot of engagement with. And I don't have data on this point, but here's my working hypothesis. I think the more moderate sized carriers and more moderate sized tech companies are aware of what larger companies are doing. And Alex Tran just gave great examples of some of the things large companies are doing. And I think the more moderate sized companies see an existential risk. If they figure out AI with their size and scale, I'm done. Or maybe more positively, a moderate sized company says, if I can figure out AI, I can punch way above my weight. I can use this as a fundamental disruptor. So those are some themes I would share that I see day to day across our industry. Now, I warned all of you, if you don't ask us questions, we're going to ask you questions. So here comes our first poll. And Keith, I don't know if you can bring that up, but let's see how our tech works. Aha, excellent. So our first poll is, what is your organization view of AI and solutions today? And you can answer whether you're a carrier, tech company, and it's just kind of your status. So number one is we're actively implementing AI today. Two is my organization is actively executing proof of concepts or pilots or other tests. Number three, our company's not doing anything at the moment. And I apologize, number three has a typo, beyond ideation. So number three is we are ideating, even if we're not doing proof of concepts or implementing. And four is the ostrich strategy. We are committed to not doing proof of concepts. We're committed to not implementing AI at our company. So again, four different categories. Actively implementing, two, doing at least pilots or proof of concepts, three is ideation, four, committed to not doing anything. If your organization is doing multiple things, choose the farthest along on the journey. So for instance, if you're saying, yes, we're actually actively implementing and we're doing additional proof of concepts, then choose actively implementing because that's the farthest along. So one, actively implementing, two, proof of concepts, three, ideation, four, we're committed to not doing anything. Alex G., what's your perspective, going back to the question for a moment, on major trends in AI here in the middle of the year 2024?
I'm glad you're bringing this up because just like you said, there's many strategies of dealing with AI, but ignoring and shaming is not the right one because it never really gets the organizations to the place they want to be. And I really want to just kind of highlight the couple of things that you said. One is with AI, other organizations are able to go and enter this new field. And I think the legacy players, meaning the successful established players, at certain point always become legacy players. And it's usually because then they're successful and established, they're really starting to ignore new technologies, right? So new nimbler companies are starting to emerge in all of the spaces, and they really have the potential of moving the legacy players and really capturing that market share. So I really feel large organizations are starting to catch up, and they're really facing the two disruptors, which are kind of very unusual in the industry. The first one are employees. The employees are the ones that are bringing AI tools to work whenever the company has a policy or not. So they're starting to use AI. In fact, LinkedIn just did a study a couple of months ago, and it's like 75% of employees are bringing on their own AI. And that's a disruption that the companies need to deal with. And then the second one is consumers. Consumers are starting to like Gen AI. And from a customer service perspective, from a sales perspective, from the interaction perspective, they really want to go interact with a business in the same way that they would interact with ChatGPT, which presents a lot of challenges for the industry. But between the consumers and the employees, they really need to start acting, and we are seeing that traction, just like you and Alex said.
Really appreciate those comments. And one of the things I tell people, senior executives, and even when I do board of directors discussions, is tell people your people are using AI today. Your counterparties, your agents, your distribution, I promise the attackers are using. People are using AI today. I can't tell you whether you blocked it or not on your network effectively. You would know that. But I'm telling you, regardless of your policies, people are using these tools and technologies today. So that's why I think it's so important to be involved in discussions like this. And I'm going to give some advice later on the importance of trying some stuff, do some proof of concepts, understand the technology, because we cannot, in my opinion, wall ourselves off and stick our head in the sand. So really appreciate those comments. While we've been talking, a poll results have come up. Any reaction from either of the Alexes on the polls, or surprised, not surprised?
No, this is pretty in line with how our ecosystem is responding to AI, at least within the insurance vertical. From my understanding, it's good to see that majority are either actively implementing or doing proof of concepts at the moment. There's not a single person in this audience that is not doing anything with AI. So yeah, very good to see.
Yeah, and again, roughly consistent with what I was saying. There are some that are stick their head in the sand, but the smallest category. And I guess none of the stick their head in the sand either attended this webinar or just didn't want to admit it. So either way. All right, so let's go on to another topic. And again, we're going to try to address tough topics too. So we've been talking about AI, but midpoint 2024, isn't AI just full of hype? And isn't there so much hype and confusion that it may be actually, slowing things down? And if you're running a large entity, you're running an insurance company or a large insurtech or tech firm, how do you deal with all this hype? So I may jump in first. And the first thing I would say, my view is, yes, there is crazy hype and there's overhype. My view is also many vendors are not helping. Just going out and slapping AI on the name of your company or GPT on the name of a product doesn't mean you're a tech company. So I really empathize with insurers and other people that are now looking out into this world where it feels like everybody's AI and how do I make judicious decisions here? So we totally understand you. You're right to be confused. So I'm telling you, yes, there's hype and overhype. I'm also telling you, we are in the age of AI. No denial, no backing away. We are in the age of AI. Nobody needs to be debating, is this real or not? So there's this duality that I'm talking about. One is hype and overhype, but reality, we're in the age of AI. And insurance leaders and everyone in our ecosystem, in our industry, is going to have to make those wise decisions to deal with the duality, which is hype, overhype, and reality, and make the right choices. And certainly, wasting time with people that really don't know AI, don't understand the domain, will be a very bad use of time and capital. Being able, as we talked about in the last answer, even if you're a moderate-sized company, do effective partnering, fight above your weight, will give you great opportunities. As we think about, where we are today, and is there too much hype in the industry and everything going on? And Alex G alluded to this, so I'll pick up on it again. I hate to say, I can actually remember when the internet exploded into our economy. And it seems to me that the era we're in is roughly analogous. So even to this day, there are people that will go back and talk about the internet bubble and the hype and will still complain about pets.com and all this stuff. And that's true. And a lot of it blew up and went away. But here's the reality that sometimes people don't talk about and they forget. The reality is the way we did business in 2002 was fundamentally different from the way we did business in 1997. The tools, the techniques, the expectations, the way people looked at technology, their expectations had changed fundamentally even after all the hype had gone away. So what I would suggest is we're in the same era. We are in the age of AI. There's going to be hype. There's going to be overhype. But we as leaders have to go forward and make the right decisions for our organizations. So Alex, do you want to disagree with what I've said? You clarify?
Look, yes, the web van never worked out,
Yeah.
but the Instacart did, right? So when we think about all those business models, and I love the way you said it, right? When we think about all those business models, they've all succeeded. They've proven over time, but sometimes the timing, or I should say the approach, is not necessarily right. And I feel the real good approach with AI is understanding that from a promise perspective, AI has this, I call it the perfect trifecta. Usually as the organizations, we really want to either do things faster or cheaper or better. And the reason I say or is because one comes at the expense of another. We can either do this better or faster or cheaper. I feel with AI, there's this perfect trifecta because we can do things better, faster, and cheaper. And I feel the right way to approach this is not look at, is start with employees, right? Don't start with technology, but start with a business process and educate employees of what AI can or can't do. That's the AI literacy piece. And then the second piece is let employees set the guardrails and let employees innovate with AI because the employees know what frustrates them, where the company wastes money or time, or what's painful for the customers. The employees know where the opportunities are, set the guardrails, and let them do that. And I think the results would be magical versus trying to come up with an entire plan and a strategy in the boardroom. Yeah, so that's that's where I feel the immediate step could be to stop dealing with the hype and being very pragmatic onto what are the metrics that we can improve right now, next quarter, tomorrow. And AI has that instant gratification opportunity when done responsibly.
Yeah, no, very, very well said. And I think that echoes a little bit of what I was saying earlier. Like your people are using this today. whether you want to admit it or not. I like your idea. It's very clear on guardrails and how do you help people think about this is effective AI for our company. And you're exactly right. I'm huge on looking for pain points in general with any technology innovation. I'm a big fan that aspirin's better than vitamins, right? Go solve a pain point that's more likely to create value than just doing something that's a good idea for you, but, well, we may not do. But Alex Tran, what do you think of this conversation?
Yeah, when it comes to identifying hype around, AI solutions, when generative AI, when that buzzword came out, you started seeing all these other startups just add .ai or Gen AI to their websites, right? And then you start to find out which ones actually have their own proprietary large language models or small language models compared to the ones that are using a GPT wrapper from OpenAI, right? I like to, when it comes to approaching AI and, trying to get around the hype or, get through the hype. I like to take the, crawl, walk, and run approach with AI. For example, there are rapid POC testing platforms like companies like Nio One, Qcentroid, which is a rapid POC platform for quantum computing models that got converted into API calls. So enterprises that operate on classical computers can now start testing quantum models with and learning outcomes within 4 to 6 weeks as well. Same with Pulse AI, which is a rapid POC platform for Gen AI models. So, use that rapid POC platform as a crawling method towards identifying which AI solutions would work best. You can literally go through their 3-step process by selecting your data set. It could be real world data, hybrid data, or fully synthetic or hybrid between the two. Move into their marketplace of API calls across different use cases. Let's say it's claims automation. Select your top 5 favorite API calls that you're interested in. Go into a sandbox environment that they've supplied for you and test it before even going through a crazy statement of work or procurement process, or going through a crazy email chain, inviting all the leadership to take a look at this before making a decision to finally move forward with a POC, and then learning after a year or two on average, right? So you use rapid POC platforms to crawl with. Once you identify which ones are the best outcomes, then you walk with it within one business unit. And once it's proven itself out, run with it, commercialize it, and expand it to other business units from that point on.
Yeah, I think that's very well said. And I think actually you answered part of my next question already. So well said. You're clairvoyant. But the next question I want to kick around with you two is, so, we've given a lot of very high level perspectives, but let's come down a little bit lower. And so what should insurers or large tech companies serving the insurance industry be thinking about in terms of AI utilization and use cases? Like, how should they be thinking about, well, I have all these companies running at me. They all claim they're AI companies. I have a whole bunch of problems. How do I pick the right use cases? And again, I think a lot of your perspective, Alex T, was fantastic. So maybe let Alex G go first on this, and then I'll jump in and we'll go from there.
Totally.
Well, I can only add to what Alex T said, and it's really about there has to be the right use case, and I think in the large organizations, a lot of companies are thinking, how do they build this into a product, right? And when they think about building it into a product, they're thinking about growth, right? And I feel from an AI perspective, it could be leveraged to grow, which is grow the top line and revenue. However, it can be used in improving the bottom line. And I feel, again, from an employee perspective and from getting everybody on board, organizations are very keen on saving time and money. So my suggestion is, again, look at the internal business processes and see where with AI we can do things faster and cheaper and better. So before the organizations start to build AI into the product, it's really about how we can build the AI into the operations by really outperforming competitors, getting things to market faster, and then meeting the needs of impatient consumers that want instant gratification. So again, start with business process, clear measurable milestones, and then execute that in chunks, and then seeing how does that work or not before going and trying to reinvent the entire architecture. That would be my advice. And obviously begin with employee literacy. That's the most important things. Just John, like you said, do's and don'ts in the AI. These are the things that we should do, and these are the things we shouldn't do. And I feel the organizations need to begin with that, teach their employees, because like you said, they're using AI no matter what. And I feel that's where the key is.
No, that's super helpful. Now, Keith, if we could bring up our second poll, and then I'll share my thoughts, and then we'll go through the poll whenever it appears. It has appeared. So this one's a little bit long, but here's why. What we're trying to get here is a sense for where the industry is at right now today in terms of investing interest. And again, if you're from an insurer, distribution company, tech company, anyone can respond to this. So for your next use case, and maybe your next use case is the first one you've ever done with AI, or maybe you've implemented many of these broadly. But we want to see, like, where's the current interest today? Or where's the keenest area of interest today from a domain perspective? So as you look at your organization and you say, the next AI use case I think we will implement will be in the sales domain, underwriting in new business, service domain, like call center, things like that, agent support, compensation, licensing, contracting, those functions, billing, claims, IT, such as coding, ticket management, variety of things can be done with AI in that space, of course, and has been well demonstrated. IT security, like cybersecurity, we broke that out. Investments, finance, actuarial, and I think we've listed every single domain in insurance I could think of, but in case we missed any other. And again, just the next time you see your company, whether insurer or product company investing, what domain do you think the investment might be in? Okay. Well, you all are thinking about that. I'll take a shot at the question that I asked. So when you talk to carriers about, well, where should I be looking for use cases? There's a couple different things I say. Or how should I think about developing use cases? Number one, look for patterns. Don't look for real narrow solutions. Now, on this session, we can't go into how to identify patterns. I will tell you, in the last couple of months, I did a session with one of the largest insurance companies on earth. We took executives from their business units, and I went through and I shared some AI patterns. And then I had them talk among themselves and say, do you see this in your business? And from that, they generated a long list of different ideas about how they could use AI within their business. Again, we don't really have time or ability to go through that today. Be glad to talk more offline if that sparked any interest. So look for patterns. Don't look for narrow point solutions. Number two, do a proof of concept. Actually go out and do something. Obviously, with this session today, we're trying to impart sharing, knowledge, insights, but nothing replaces going and doing and trying. And I'll share with you those insurers and those tech companies that I talked to that have actually implemented an AI solution, or at least done a proof of concept. Their level of knowledge is far higher than those that have not. And it's not because they're smarter, bigger, spent more money. It's just that actually getting in and trying a proof of concept, understanding the capabilities of the technology today, understanding the limitations of your data or the strengths of your data. All of those things are invaluable. And as I said earlier in one of my comments, I'm a huge believer as you think about use cases, think about aspirin, not vitamins, think about pain points, think about things that are problems you would like to solve, and see, is AI a good solution or not? Alex Tran, I want to give you an opportunity to see if you've thought of anything else, but in the meantime, our poll results came up. Any surprises or reactions?
Yeah, well, no, I would say this is pretty in line with what we're seeing as well throughout the insurtech ecosystem. When I saw the poll come up, I was thinking claims is probably going to take number one, which it did. Second, I was thinking underwriting, but it looks like sales took second on this poll, and then underwriting came in third. And then I would say servicing as well would be the top four for the most part. So yeah, this seems um, pretty clear. Like I said, aligned with what we're seeing throughout our ecosystem here.
Alex G, any reaction or comments you'd like to share?
Not really. No, this really aligns with my expectations. I think it makes sense. Yeah, nothing to add.
Yeah, and Alex T, I'm with you also. Sales surprises me a little bit. That's an interesting trend, although perhaps fortuitous, as I was talking to a tech company today that wanted to talk about sales in AI, and how to implement it. So again, this poll may be giving us a forward look at where, interest is going to be in the next several months. So really appreciate that.
I think if
Let's
you look at it from like a co-piloting use case, it can fall in a lot of those bucket areas, right? With sales, assisting the agent, if especially it's a new agent that is just learning how to sell insurance products. We can see definitely value being provided there.
Yeah. All right, so let's move on to a topic we've touched on lightly, but let's go in deep on this one. And again, we said we're not going to shy away from tough questions. So here's how I phrase the next topic. Isn't AI about to stall out insurance just due to risk? Is the real mid-2024 trend line death? Isn't compliance and legal and regulatory and all this uncertainty going to just stop AI in insurance or stop AI more broadly? Alex G, maybe you'd like to share your perspectives on this question.
Well, I think just like cybersecurity, right? Just the internet, it will bring up just more products, right? AI inherently, as any new technology, AI is introducing a new level of risk. I mean, that's a fact. And I really feel this presents an opportunity for the insurance company because we've talked about, well, how do insurance companies adjust and implement AI within their own product portfolio and operational framework? And at the same time, whenever that's an insurance or a warranty, there's an opportunity to manage AI risk by offering a product on the market that is specifically tailored for that particular niche. And I feel we'll see a lot of, just like with cybersecurity policies or warranties, a decade ago or 7 years ago, we've seen the emergence of those new products that are tailored specifically for that vertical. And I feel that we're going to see lines of business and the products that are going to appear just to service and manage those particular risks. And frankly speaking, I might be slightly sarcastic here, but the only reason the only way organizations can understand that risk is by actually managing and dealing with it. In the same way, any new technology from email to World Wide Web, whatever those things are, they introduced a risk. And over time, that risk was successfully managed. It was properly regulated and it was properly adopted. Same thing is going to happen with AI. And I think, Alex, just like you said, and John, you said, it's all about being a responsible first adopter is essential because people will learn from that. And when they're responsible, they're going to pivot their business model and operations to benefit from it and benefit customers, which I feel is essential.
Yeah, I really appreciate those remarks, and I agree. And one way I look at this when I'm asked about this is like, let's not talk about insurance or financial services for a moment. Let's talk about the larger economy. So when we say we're going to start regulating AI, we're going to shut this down, we're going to slow this down. And I say, we're going to pass laws where you can't use AI in cybersecurity. As a former CISO, dear God, I hope not. That would be disastrous. Are we going to pass laws that you can't use AI at McDonald's, which it's used today in a co-pilot model with the humans? Are we going to pass laws that say you can't use AI in oncology? I mean, and so when you start delving into specifics, what is it we're going to shut down? People, and I ask those questions, people say, no, 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 just the bad stuff. We're going to stop the bad stuff. Well, what I would suggest is sometimes it's harder for us in open democratic societies to all come to agreement on what the bad stuff is. It's not as easy as people that just want to run around and say, well, regulatory concerns are just going to shut everything down. Of course, there could be, and we're already seeing evidence of regulators looking at claims or underwriting. And I trust that everyone in our industry will follow the regs, both in terms of letter and spirit. So I'm not saying that. I'm just saying these big, broad, apocalyptic, everything's going to stop. I don't see that happening. And I also applaud like what the NAIC is trying to do to share information and educate people. But again, you can see I don't believe there's going to be some regulatory force that just stops AI and reverses it across our society. And once again, that's why I think the ostrich strategy, stick our head in the sand, just wait for this to blow over, is really, really risky. Once again, I'm going to probably expose my age as if it's not clear enough. I can remember earlier in my career being told that we could not put email addresses on business cards because you could never use email in a corporate environment. Alex Tran, stop laughing at me. It was because you can't do that, because if somebody sent an email, that's legally binding, and that's just not going to happen. And an attorney gave me this lecture. Later in my career, after I was done my meetings, and I'd go back to my email box and I had 500 emails, I would often think of this attorney giving me this lecture that email will never be used in a corporate environment. And I'm not picking on my friends, the attorneys, and I have many friends. All I'm saying is that it's very hard, based on our experience in our economy, in our society, to say regulation is just going to shut all this down. And we're going to go back the way it was 5 years ago, stick our heads in the sand. One of us brought up the issue of bias already. Bias is totally a legitimate concern, and we as a society need to talk about it. But in my conversations with executives, when we bring up bias, I always say, and this is not rhetorical, if you find bias, do you think it's easier to fix in an algorithm or a human being? My sons are only teenagers, but you already see aspects of bias coming in. I would suggest that if we find bias, the humans may be tougher to change than the algorithms. But Alex Tran, how do you think about risk and compliance and impact on AI?
Yeah, no, I mean, there's definitely risks that have already been identified. You can definitely Google it, just type in the name of the insurance carrier and AI lawsuit, and something will come up showcasing that algorithms have showcased biases in claims processing. In certain area codes, claims can be straight through processing, while in other area codes, they have to take a way longer process, a way longer route, ask more questions, offer more data in order to finish their claims process there. So imagine, the underwriting when it comes to pricing as well, right? So yeah, I think Jackie Hernandez asked the question, how far are we from understanding the real risk? We're not that far. Lawsuits have already been put in place. We have state regulators like New York and Pennsylvania already rolling out AI guidelines for carriers to follow to reduce the risk there and protect consumers. So I think for the most part, like, the regulators know AI is here to stay. Now they need to figure out how to put the safeguards up, and that's what's happening right now.
Fascinating times. And Keith, I know this is a little off pace, but if we could bring up poll number 3 as we go into our next question, I'd like to. Awesome, Keith. Thank you very much. So this is pretty straightforward. Again, everyone, whether you're a tech company, insurance company, distribution, everyone can respond. So as we look at AI adoption in our industry, what do we think the largest challenges will be? So what we were just talking about, compliance and regulatory, lack of clarity there. Number 2, legal issues, which are different. That is models that have gone out and trained on the entire internet or other sets of data, and people are New York Times suing, or famous people, Scarlett Johansson saying negative things about them. So that kind of, gee, there's some risk we might get sued here, which is different from compliance and regulatory. Number three, insurers just don't have the money, budget, funding this year or into perhaps next year's budget cycle to really do AI. Or four is the single largest issue, culture, resistance to change. So why don't you provide us those thoughts, and we'll go into our next question. So my next question is something that every webinar and podcast says, what's the best advice you have for people? So I want to be a little countercultural. I don't want to ask that. I want to ask you what's the worst advice you have for people? So someone's thinking about AI and insurance. What's some really, really bad advice? So Alex G, maybe you could start.
I think my real bad advice is I'm full of bad advice, right? But look, I think the bad advice is go all in. And I think we are hearing a lot of this is go all in, build out an infrastructure. And no, I think that's big. That's really bad advice. I think good advice is, can I give good advice here? By the way, I want to ask
You can slip
yeah.
some in. We won't edit it out. Go ahead.
Think big, start very small. Execute with a pragmatic milestone in mind, right? Before you try to make $1 billion in growth, try to save $1 million by using and learning on this technology. So again, don't go all in, don't go fast. Small, measurable milestones, but don't delay in taking them. That's the good advice.
So you overachieved. You get good and bad. Alex T, any bad advice or good advice for the people watching this?
I think the bad advice that many IT teams that I've noticed would say to a lot of their strategy team or innovation team is like, oh, if it's not Google, if it's not IBM, if it's not Microsoft, if it's not a big company that has raised hundreds of millions of dollars, we should not touch it. I think I learned that very well from my AI session with the 4 insurance carriers last week when they thought their 2 picks were going to be the best for them based on level of funding and maturity of how that startup looks. So don't always judge a book by its cover. When you're, I guess when it comes to good advice, when you're talking to these vendors, just go straight into the demo. Say, hey, let's skip the jargon here of like what inspired you or how big the market opportunity is and all that stuff. Go into the demo, and once they see the demo, the dots start to connect, and then you can really see what's underneath the hood and feel like you are pretty much driving behind the wheel to validate that that's the right solution for you. So don't just go, you know.
Well, as always from you, that is super insightful. And you're so right. Where, an ancient pattern from last century was, well, you always buy IBM, you can't go wrong. Or, there's other companies that have sort of fallen into that over the years. But in times of fundamental change, I think that's a high risk strategy. And, I spend a lot of my day talking to different carriers and tech companies about, well, do you understand how those models were trained and where the data came from and its explainability and what the decisions are? And I couldn't agree more. Just hitting the default, well, pick a large company, it's all the same, is really, really bad advice. And I have a few more comments, but in the meantime, our results have come up. So what is the number one concern for
You know,
people?
I was thinking culture was going to take first, but then
Yes.
when I saw compliance and regulatory, I was like, oh, it's going to come close, and they're top. So
Yeah, I would have lost money on this one. I would have thought for sure culture and resistance would have won out. Now, again,
yeah.
we're all jaded, I guess I should say influenced, but jaded by our past. So having worked in the industry for so long and fought against culture, that maybe I'm, unduly scarred. But that's why looking at some data points and getting some different perspectives is definitely of interest. Any other comments on the poll? All right, now I get to give bad advice. My bad advice is sit on the sidelines. Look at legitimate issues we brought up, and in no way am I going to dismiss regulatory, legal. See, those are all legitimate issues that have to be solved. But the bad advice is opposed to methodically solving them, just throw up your hands and say, well, these are not solvable. Look at the legitimate overhype and say, well, there's so many things are overhyped, so many people are overhyped. None of this will work. That's really bad advice. Say things like, well, we don't have the resources to do a proof of concept. Proof of concepts cost money and time and effort and energy. We'll go ostrich. It's too expensive to do that. I'm sure you're all aware there's an ancient saying. It says, if you think education is expensive, try ignorance. And that would be my bad advice. Try to be ignorant, stick your head in the sand, don't do proof of concepts. And I do think that your company will really regret this, and you're exposing yourself to more risks. So obviously, if you want the good advice, just invert it. Go out, try some things, work with some partners. As Alex Tran said, that work requires some work on your part. You can't just go randomly pick big tech company, that's the answer, but you need to understand how is their solution going to bring differentiated value to you and your organization. All right, we're getting close to the end here. Now, this one we have to do. We can't avoid. We have to do future predictions. Maybe I'll start here and go to Alex G. My prediction for AI in insurance 1 year from now is no matter what we say, it will have moved faster than what we predicted. The technology and the advancements are not slowing down. They're speeding up. Alex Tran gave multiple examples and used some dollar amounts. Investments aren't slowing down. The demands on the insurance industry and leadership, those are not going down. So we see huge investment, huge interest, huge pressure. So I believe AI in insurance will move faster in the next year than what we can even predict now. Now, point number two is there are also going to be a lot of failures with AI in insurance. And I think what we will realize, to Alex Tran's point, is companies may have just picked companies to partner with on AI almost blindly or reflexively without understanding the capabilities and the fit. And those cases are going to end up bad. Or perhaps the insurer did not pick the right use cases, or pick the right use cases, but didn't pick the right AI technology and solution. So for sure, we are going to hear about a lot of failures and things that went awry. But I do believe that overall in our industry, AI is going to move faster than what we can see today. Alex G, what's your perspective?
My perspective is, look, I can only add to this. What you've said is, I feel the future is faster than many think. Is already we're seeing AI applications to be the most adopted consumer applications in the history of the universe. The reason I bring up consumers is at the end of the day, we're all consumers. And then we are part of large enterprises or companies, but we bring our consumer skills and expectations and knowledge to work. And we're going to change those systems from within by embracing AI. So that transition is going to be much faster. I feel it's going to unlock the era of innovation, because for the first time in history, within enterprises, every function can innovate with AI, whenever that's facilities, employee cafeteria, or IT. Or product development or corporate strategy. There's tons of opportunities to innovate. And I really want to highlight something that Alex T said. Over my experience, and especially at Cisco running their startup programs, I've seen that a lot of great ideas and the capabilities to execute come from startups. And again, often organizations tend to discount startups. They shouldn't, because if they look at the rear view mirror, it's the organizations that were started up 20 years ago, and not many companies believe them. They're the ones that are dominating and playing the field. So it's the constant cycle. So I think the future is working within the ecosystem. There's always a room for large established players, and there's plenty of room for startups. It's a fast developing field, and being able to bring in smaller players, new companies, and integrate them within the system is essential for keeping up with progress, because typically a progress is driven by much smaller, nimbler players that approach technology as a team sport, and they're faster in bringing product to market. And some of those products are pretty exceptional.
So awesome. So we are getting close to the end of time. So maybe we'll do a rapid round on our last question. So what is one thing that people should take away from this session? I'll jump in first. Try something. Go experiment. Do a proof of concept. You will learn far more by going through that process and journey than you'll get from a million webinars, even as good as we think this one might be. So go try something, learn, understand the capabilities, the limitations, and learn how, see what can deliver distinct business value for your organization. Alex T., what would be your one takeaway you would advise people?
I would say always stay curious. Ask yourself what could be done better, even if it feels perfect. There's never a perfect process. It just keeps evolving as the industry grows.
Alex G.
Innovation doesn't happen in the boardroom. It often happens in the break room. Empower your employees to innovate. Give them tools and give them guidelines, and let them do it.
Well, thank you very much. And so I'll just close here. First of all, thank our audience, both those participating now and those that will watch a recording of this. And secondly, of course, thank my very accomplished guests. As I said at the beginning, I was a little bit nervous about this because as you start a seminar, you usually don't, or a webinar series, I should say, you usually don't start with an all-star cast like this. So I am deeply grateful. And finally, to the audience, do let me know of any other topics in the world of AI that are of interest to you. Thank you, everyone, and have a good day.
Success.
Thank you.